Hi there, welcome to Stella Wyckoff Technical Analysis session, and Stella is still on the move that seemingly duplicating what happened back in mid-July and mid-August, and we're in mid-September, so it will be interesting if it happens exactly the same way, while it seems that it has 2 weeks of price climbing already, but let's not be too optimistic. Let's see why. So here, 2 weeks ago, about 10 days ago maybe, last session basically, we have shared this saying, okay, there's a 50% chance it's going to come down for a sign of weakness over here, which like after this sign of weakness confirmed, it pops up to this level. That should be an LPSY, so it kind of get to the or hitting the 35% chance, but it's not over yet. I already mentioned there's a 15% chance that it has to the selling, not selling, the second test. So if I enlarge this, however, if we look at the volume, it does not seem like there's much force pushing the price towards this point, so that's why I'll still keep it at 15%. This has kind of been realized already, so I won't put a question mark here anymore. So this is definitely an LPSY, unless it shoot to the upside, and it will make it obsolete. So I'll keep it here, maybe still with a question mark, just to make sure when next time when we come back, because we don't see a down leg yet. So I'll keep this question mark until the down leg appears, which, looking at the volume, is weakening, and it's kind of likely that it's going to come. And then this, after removing this percentage, I say this is like 25%, this is 75%. And if we look at the Bollinger Band counter squeeze, while the squeeze seems still far, but because it looks like it's in a stage at a late distribution cycle in terms of Wyckoff, the likelihood of it coming down because of this declining volume seems to be getting higher and higher. And let's check the daily chart as well, then you'll see why I said it seems like it's going to repeat the patterns of mid-July and mid-August. So enlarging this as much as possible and switching it off. Here, after the crazy FOMO period back in July, beginning of July till mid-July, there was a downtrend. So it started somewhere around 17th, 18th, where the actual climax came, and then eventually it bounces around the downward channel edges, and then it broke out eventually. If you're into candlestick pattern analysis, this looks like a bull flag, which is bullish, and it broke out to the upside. However, it did not go past the price level, basically being suppressed under the blue key level of 0.475. And then eventually it develops a new downward trend, and now, kind of similar to what happened back in early August, it break outside of this downward channel, or blue flag, if you would like to term it that way. So after going outside of this blue flag or downward channel, it seems to be heading towards something like what happened over here. So a bit of bouncing actions, shoot up, bouncing actions. Would it happen in a way that this has some other bouncing action and eventually repeat it again? So it seems like it's happening that way. That's one very likely possibility. Let me move these text over. So this remains a 70% chance, meaning it may come test the light blue level and then got rejected. That's where the peak of the LPSY would be, and eventually come down to test the green key level. So that's why these two are having the same percentage, because that's the same scenario. These two tags or stages belongs to the same scenario. The second scenario is this one. This over here shoots over the light blue key level and eventually comes to challenge the blue key level of 0.75. So 0.41 is the very first key resistance the bulls has to challenge and go over before they can come to this point. So that's the daily picture, and if I turn on this just to check, the Bollinger Band corner squeeze currently isn't having a squeeze yet, but because like after releasing this squeeze over here, when the price dropped, it kind of starting to regain a bit of strength. Look at this staircase line that's getting towards the orange, likewise for the one at the bottom. So in the next few days, if this continues to trade narrow range, the squeeze will happen. And when it happens, you already know, if you're not new to my session, that will squeeze the price to a bigger swing. So like what happened here, the squeeze happened, it swing to the downside. Well, not always towards the downside, there are occasions where somewhere like this, shot up. So it's going to tell us a swing is coming, which it looks like it's heading towards that direction. Combining the other indicators and Wyckoff pattern, the likelihood, that's why I said, is going to get to this side where it's going to be a long leg as well. So these two, from here to here, was about 25% roughly drop. From here to here, once again close to 25%. So if this happens, and if this LPSY is going to peak somewhere just lower than the light blue line, why I'm picking this spot? Look at the candlesticks here. They all line up to a level around this point. That's around 39 cents roughly. So where we are now might have already hit this resistance, this hidden resistance right there. So somewhere around 39 cents to 40 cents. That's a range. If you have been with my sessions for a while, you know I always say these key levels, or like intermediate levels, are always a range. So don't just take one number and think it is where it is. So this line, or this candle over here, is getting weaker as it reaches this hidden resistance level. So the likelihood of the LPSY at this level seems to be quite solid. So let's get rid of this line and then zoom out to see if there's any indication. So if not, let's draw that drop if it's like around 25% where it would go. So this is somewhere close to 25%. So it's around 29 cents and very close to the white key level over here. That's the top edge of the long-term playground zone. So you can see the long-term playground zone here. That's where the well, most of the time period the price has been traded within this area. So when it drops another 25%, it's getting very close to re-entering this zone. But it can also start accumulating around the white line, much like what happened back in March this year. So you see, it first came down early February, and then bounced above the green key level for a while, and eventually come down for accumulation, a quick distribution, before it gets to where we are now, this distribution cycle. So it can come back down below the green key level and then accumulate around the white again. If in the weekly that's going to stay around this level for a little longer. If not, if the weekly really falls down to an accumulation level around the red area, the 0.135, then in the daily, don't expect that gradual decline would happen. It would pretty much fall quite sharply towards a new accumulation cycle and very deep as well. So these are some possible scenarios we are possibly going to see in the next couple of weeks. So for now, again, it's still kind of towards downwards, more likely. And thanks for joining me. See you in the